Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we saw the pullback continue. Last week was still quite strong, even with Friday's weakness, but that weakness is continuing a little bit today. I guess, Justin, the question now is, when does that weakness change from normal and expected and warranted and wanted to a red flag for this rally?
Well, sometimes it's one of those things, you know it when you see it. And right now, I don't see it. So certainly there was a risk-off day today, but we'll go ahead and take a look at the indexes and also a few stocks that are holding up on their relative strength features, including Builders, FirstSource, Toll Brothers, and Uber.
All right, we'll take a look at those, but first let's look at the major indexes. The NASDAQ down 1% today. Harder hit, though, were small caps, with the Russell 2000 down 1.4% in the session. The S&P 500 off 0.6%, and the Dow down just 0.1% today. Justin, it seemed like defensive stocks really shined today in comparison when you have the NASDAQ taking such a big hit in comparison.
Yeah, exactly. I mean, it was certainly risk off. I mean, you had the small caps, which as the small caps do better, as we look at the IWM, which is the iShares Russell 2000. So this is kind of a broadly followed small cap index. That one was the one that was down the most. And, this is what you usually consider risk on when it's doing well, risk off when it's doing poorly. You also had, just before we get into the indexes, you can take a look at the dollar with UUP. That was up strongly. Now that's getting up to its 50-day line. So the question is this an area where it's going to hit resistance? You also have the 10-year Treasury yield surpass its 50-day moving average line. So that was also showing a lot of strength in the yield. So that means that bonds were falling, getting sold. So those are kind of the backdrop of what we were seeing today. And, with that happening, you do expect growth to take a little bit of a hit. The dollar getting stronger does affect some of the multinationals. 10-year Treasury yield, hey, you're going to discount those future cash flows. So there's all sorts of things that are going into play there. But let's just put it in the perspective, and let's take the NASDAQ, because the NASDAQ has been the leading sector. And when you look at that, this is, we're still well above the 10-day moving average line. I think we came to the 5-day moving average line. That's a pretty short-term moving average line to use if you're really kind of looking for a long-term trend here. So I don't want to, make too much of 2 days here. And again, we can look at some of the defensive areas that were strong today. XLU, for instance, the utilities, XLP, the consumer staples, those were the only two sectors of the 11 sector spider funds that were up today, both of which are defensive in nature. But these are not strong looking at this point. They just had a good day. So a 2-day pullback, I think that's just way too early to say that there's any problems here, especially given the rise that we had from the bottom. I mean, we had just such a phenomenal move, even from the follow-through day on January 6th. So a 2-day pullback, I think that's actually constructive. This is something that's good. We had to kind of pull back a little bit and digest these big gains that we had so far this year.
Yeah, and I'm taking a look at the S&P on a weekly, cleared a trend line from those ultimate highs a couple weeks ago. So yeah, a pause here, but it's even more pronounced. The NASDAQ, its move off lows and pausing right around a round number at 12,000, which coincides with resistance that we've seen previously. So with all of those leading stocks, Justin, that we saw make strong moves since the follow-through day, as you mentioned, it would be nice to see some alternative entries right now instead of us trying to chase stocks that are extended, waiting for those new setups.
Yeah, that's the thing is I look at it as a second chance here for some of these stocks, that if you were looking at some big powerful moves and you're like, wow, this looks so good, and maybe I was a little bit too scared that early on in the follow through day or the first week or so, hopefully these give us some second chances here. And I don't find a problem with stocks hitting resistance and pausing. A lot of times I feel like that's where your handles are built, and that pause can kind of build a platform from which you can launch from later on down the road.
Absolutely. Now, we looked at a couple of ETFs. I think a few more to touch on would be XLE, continuing to see that bleed here today. Also, let's take a look at chips, off today, but this has been one of the strongest groups since that follow through day.
Yeah, and SMH, the chips, still, they're still holding above their 10-day moving average line. So I think this is, I mean, when you look at even last week, we're still kind of in the upper part of the range from last week. The energy, before there was often like weakness and growth, and you would see a shift to energy. That's not happening right now. Energy is coming down with everything else. So just be careful of thinking like, what worked last year isn't necessarily where we're at this year. So just be careful and make sure you're paying attention to what's actually happening, not what you think, and not anticipating too much.
Great point, Justin. Also, just a further signal of the risk off day. Here's a look at ARKK, down 1.4%, but a strong move here off the lows as well. So these growth stocks that are maybe trying to come back to life, obviously, there are some that look better than others. And we know that the vast majority of former leaders will not come back to lead in another cycle, but some will. And maybe some are just shorter term trades and maybe not long term leaders. But for stocks that we are seeing turn that corner, forming bottoms, maybe they had strong runs to kick off the year. This pause, like we said, could offer some potential new entries for these more growthier names that we typically like to traffic in.
Yeah, and certainly with ARKK, that's kind of the more speculative, right? I mean, you've got the growth. Everyone considered the NASDAQ composite kind of full of the speculative, but ARKK kind of said, hold my beer. Let me take it to another level of speculation. So look, we had 6 weeks up in a row. And those were not small gains. These were some pretty big gains. I mean, up like, well over 50%.
Yeah. So 10% followed by 6%, preceded by, over 1%, 15%. So yeah, I mean, from 30 to 45, yeah, 50% move there.
Yeah, you're going to expect, when you have such big moves like that, you're going to expect a little bit more of a pullback. But still, when you look at the pullback here on the more speculative stocks, this is still not giving up too much ground and holding above its 200-day moving average line. This isn't necessarily where I'm fishing, because I think there's been a lot of damage there, but it's not getting hurt that bad considering the move up it's had. And so that just, again, speaks to where, risk on might not be completely dead. It might just be taking a little break.
A well-deserved break. Okay, let's take a look at some individual names, starting with Toll Brothers. We've got an RS line blue dot on the weekly chart, so that right off the bat is promising, and seeing a handle form here for the stock, which has earnings coming up in about 2 weeks, and the stock is in a strong uptrend. It's been holding that 10-day line for quite a while, Justin.
Yeah, and here again, a lot of these stocks, the names that we've been following the most, a lot of them are still above that 10-day line, certainly above their 20-day lines. But this relative strength is something that when you're looking at pullbacks, I like to look at the stocks that are holding up the best. I have one screen that I use where I'm looking at the things that are in the upper part of the range. I just sort by that. Where is it in its closing range? And I look for the things that have held up the best. I look for those relative strength lines at new highs, like we're seeing with Toll Brothers here. This is not alone. Now, one thing that we do have to just kind of caution people, if you look at that daily chart and you're seeing, oh, look, it's a handle that's forming here at 63.19. Let's not forget that this is an NYSE traded stock, and a lot of these stocks had goofiness that happened on January 24th. So I don't know that you can necessarily trust that 63.19 price there because of that big widespread that was happening. And again, a lot of action was happening on NYSE stocks in particular because of that glitch. But what we are seeing here is, if you take that step back to the weekly, we're kind of forming that, right-hand side of the cup. We're coming up to those old highs. And again, a pause here could still make for a little handle. So that's what we're looking for. And ITB is a stock that's the home construction. That's a stock or ETF, I should say, that has been on leaderboard product. Nice move there. Not what you would have expected, right? You wouldn't have expected home builders to do well in this market,
Yeah.
but you look at the industry group, and it's number 12 out of 197. A lot of participation broadly in this group. Toll Brothers is not the only one. You've got, DR Horton, KB Homes. They're all kind of participating here. So when you've got a group move behind you and that relative strength, I think these are things that you want to be paying attention to the most.
Yeah, and definitely props to David Ryan for putting this group on our radar when it was just starting to turn the corner before that strength was really obvious.
Yeah.
Which, he's so great at doing.
Yeah, it's certainly a lot more obvious now. Again, people might still be scratching their heads and saying, why? Why
Right.
is it happening? That part might not be obvious, but the chart is certainly showing you strength here. So when you miss things, that's where you kind of look for the next opportunity, and that could be playing out right now.
That it could. Let's take a look at BLDR. So sort of in this theme or a related theme here, Builders FirstSource has been on a strong move. And I think I see a theme here, Justin, with relative strength. This one holding strong amid the pullback.
Yeah. So, here, this is kind of the supplier for a lot of these home builders, and the materials and everything. So, yeah, you would expect this to do well along with those. We're seeing a lot of strength in some of these construction areas. So here we are again. Getting to those previous highs that we saw over a year ago. This base is 57 weeks long, so a very long base here since it's been at new high ground. But we're just touching up there, and so to me, again, it's fine that we're hitting resistance at that level and we're taking a pause. That's a chance to kind of get rid of some of the weaker holders. A lot of times I'm going to look at the volume down below, and at least recently, it seems like there's been a little bit more volume on the upside, not as much on the downside. Again, a lot of it has been below average lately, but it certainly seems to be favoring the upside. And so that's a positive. We'll take a look at the up-down volume ratio. You see that on the weekly chart here over on the left-hand side. That's 1.6 for this one. So that's pretty good as well. I should have mentioned that Toll Brothers, by the way, actually had a 2.0 up-down volume ratio. So that's positive as well. So you got those things going for it technically. And yeah, so another one that I'm kind of looking for, hey, can this pause here and give us another chance, as it blows through that resistance with power, if that does happen.
So now I guess the question is, Justin, with this stock 9% above the 21-day, 19% above the 50-day, best case scenario, we do get a pause here before it blasts into new highs above that prior resistance, but we want to see a pause long enough maybe for some of those moving averages to catch up. How are you balancing that? Because we do want to be focusing on strength and those relative outperformers and stocks in leading groups. And if we are going to see this market rally continue to pick up steam, how do we balance focusing on the strength but not chasing?
Yeah, so this is where pullbacks help, right? Because during a pullback, what you do is you see which stocks are holding up the best, which ones are continuing to have that relative strength up in the largest, the upper area. So that's where I'll be focusing, and I think pullbacks can give you a lot of good information. What breaks down and starts looking broken versus what holds up and starts looking constructive. You look at so many of the past leaders, and handles getting tacked onto cups is just, that's one of the things we look for. That's ideal. And as you said, it gives those moving average lines a chance to catch up. We had such a strong move off the bottom, and some digestion of these gains is very constructive. So again, that's what I'm looking for. you don't want to see a breakdown completely where it loses, loses all the moving average lines or comes down so steeply that it looks like there was no support there. But if you get a nice gradual move, a little drift downwards, especially when there's very low volume on the move down,
Right.
that's kind of the ideal situation.
That it would be. And speaking of former leaders trying to come back to life, let's take a look at Uber Technologies here. It has earnings due in a couple of days later this week. A lot of upside volume coming into this stock as of late, Justin. So relative strength in spades here. And even though it is showing itself as extended, on a daily chart, if we take a look at a weekly chart, it looks like it's coming up to a pretty critical area.
Yeah, it is. And I'm glad you showed that weekly because you can, it's important that you get the idea of how far Uber came down. It was really one of those that got devastated. But if you kind of look at that, downward trend line, that downward slope, it really does seem like it's kind of broken to the upside there. And now it's at this prior level of resistance. So again, a little pause here would be nice. Now, the trick here is that Uber has earnings coming up. They're going to be before the open on February 8th. So that's, Wednesday before the open that they're going to have their earnings. So maybe that's not enough of a pause in order to, kind of use the earnings as a catalyst for a breakout. But it is important to kind of note some of these leaders that are coming back potentially, how they act right
Right.
now. I mean, we're looking at things like Shopify, and some of the computer software enterprise. We talked about that on IBD Live today. Some of those making a comeback, Dynatrace, and others. So, when you're looking at these potential turnarounds, you've got to look at the way in which they do it. Is it in a nice orderly fashion? And yeah, you expect the bounce to be strong off the bottom, but does it give those pauses? Does it give that constructive tight action? Because that's what we really want to see, some tightening action. And Uber did join the leaderboard watch list today because we are going to keep an eye on this one as one of those leaders that may have a chance to come back.
Awesome. Well, I know we'll be keeping a close watch on the earnings report and the reaction to see if it can flex that strength and then maybe offer us an opportunity to get in. But Justin, it seems like a lot of what you're saying is focus on stocks with high RS, but
Yeah.
that doesn't mean they're buyable right now.
Yeah. And one other tell that I will say that all three of these stocks had in common is if you compare them versus the indexes, right? The indexes had the lows in June, and then they, rallied up in August, made new lows in October, but these stocks didn't. They had their lows in June, and when it came down to October, when the indexes were making new lows, these stocks all have something in common in that they held above those June lows. And in fact, when you kind of came down again to test those lows in January or December, they held again above the October lows. So you've just got this trend of higher lows, and when you see that happening over and over again, hey, that suggests that the stock has kind of turned the corner and is in an uptrend now.
Yeah, definitely something to pay close attention to. Thanks so much, Justin, for your analysis today. And to everyone for tuning in, we will, of course, be back with more tomorrow morning on IBD Live. So don't miss it. Investors.com/IBD Live for all the details where David Ryan makes his return to the show. We'll have to see what stocks he has up his sleeve and get his assessment on overall market conditions along with the rest of our esteemed panel. So we'll see you there, and we'll see you right back here tomorrow after the close.